Let me fill you in on something. I used to think investing was just for people who already had money, until I realized that waiting was actually making me lose a lot more. I'm going to share the 4 rules that took me from WTF am I even doing to, okay, I actually got this. We're diving into the mindset shifts no one talks about, how to stop stressing every time the market moves, and the easiest way to protect your money even when everything feels like it's crashing. Picture this, all right? You invest your money, go about your day without checking your apps every single 5 minutes or whatever happens, and you're still getting rich. Sounds nice, right? And if you've ever thought, I'll start investing when I have more money, I gotta be real with you. That mindset's exactly what's keeping you stuck. Welcome freaking back, rich bitches, or if you're new here, hi, I am Taylor Price, and this is Price Will Say, your go-to space for financial literacy that helps you thrive, not just survive. When you hit that subscribe, you're literally joining the rebellion where excuses die, money thrives. And before we dive in, smash that like button if you're all about passive income and financial freedom. All right, here's what we're getting into today. The number 1 mindset shift every investor needs. The rule that keeps your money growing even when the market crashes. How to avoid emotional investing mistakes. And rule number 4, let's just say most people skip it and they regret it for the rest of their lives. I'll drop the timestamps in the description so you can jump around if you need to, but trust me, you'll want to watch the whole damn thing. Each part builds on the last, and missing out in even one step could mean leaving money on the table. So let's get into it. Rule number 1, protect your money first. Protect those assets, baby. You've probably already heard the saying, you have to spend money to make money. And sure, in business or side hustles, that might be true. But when it comes to investing, that mindset can set you in some serious trouble, because the real game changer isn't just about making money, it's about not losing it in the first place. So here's why. Every dollar you lose takes twice the effort to recover. If your investment drops 50%, you don't need another 50% to get back on track. You need 100% gain just to break even. That's a lot harder than people realize. So before you go chasing the next big stock, crypto, or some nice once-in-a-lifetime opportunity, remember this: making money is pointless if you keep losing it just as fast. The smartest investors aren't the ones making the craziest bets or hoping for a jackpot, the mega mills. They're the ones who protect their money first, then let it grow. The number 1 mindset shift every investor needs. Most people think investing is all about making money, finding that one big win, riding the hype, and cashing out with that fat stack. But that's not how real rich, real wealth is built. The best investors, they focus on keeping their money first, then growing it. Why? Because losing money sets you back way more than you think. Let's break it down. If you lose 50% of your investment, you don't just need another 50% to get back where you started. You actually need 100% gain just to break even. And let's be real, that's not that easy. This is exactly why smart investors don't YOLO into risky plays or throw everything into the next hot stock that you found on TikTok. They protect what they already have before they even start thinking about making more. Think of investing like building a house. You wouldn't start by decorating the living room if your foundation had a bunch of fucking cracks in it, right? No, you'd make sure the base is solid first, because without that, everything else could collapse and crumble. The same goes for your money. Before you chase big, shiny stars, focus on protecting what you've worked so hard to earn for. Why this matters. Back in 2008, a lot of investors woke up to absolute chaos. Half of their portfolios gone just overnight. But the ones who stayed calm spread out their investments and played the long game. Yeah, they didn't just recover, they came out way ahead. How to protect your money. Do your homework. If you don't actually understand what you're investing in, don't even think about putting your money there in the first place. Blind investing is just fancy gambling. Don't fall for the hype. Meme stocks, crypto pumps, and get rich quick plays. Okay, they look exciting, but trust me, they crash way harder than they rise. Diversify. Don't throw all your cash into one thing, okay? Spread it out so if one investment drops, you're not losing everything. And speaking of smart investing, dividend stocks are one of the best ways to keep your money safe and to actually earn money and make it work for you. These stocks literally pay you just for holding them. No stress, no constant checking your phone, just solid long-term growth. If you want my top 12 dividend-paying stocks that will help you build wealth without unnecessary risk, I've got you covered. I'll link that video up here and add it into the description. Rule number 2, think long-term. All right, let's talk about one of the biggest mistakes new investors make, expecting to get rich overnight. I totally get it. When you see people on social media flexing insane returns or talking about how they turned $500 into $50,000, it's tempting to want to get those fast gains. But here's the reality. For every person who wins big, there are thousands who lose a lot bigger. The real key to wealth, thinking long term. And I made this switch a few years ago. If you're constantly buying and selling based on market hype, you're not investing, you're gambling. And that's how most people lose money fast. Because here's the thing, the market isn't meant to make you rich overnight. It's designed to reward patience. A big fear in investing is, what if I lose all my money? In the short term, the market can feel like a roller coaster, but here's what most people overlook. It always recovers. Think about it. Every crash, every recession, every dip, the market has bounced back stronger. Let's look at history. The Great Depression was the worst economic downturn in history. The market crashed nearly over 90%, but over time it recovered and went to reach record highs. In 2008, the housing market collapsed and stocks tanked. People thought it would take decades to recover, but by 2013, the S&P 500 had already surpassed its pre-crash highs. Even in 2020, when COVID hit, and the market had one of the fastest crashes ever within just a few months, stocks rebounded. And today, they're basically at all-time gains, all-time highs. The lesson, short-term crashes are temporary. Long-term growth is what actually builds wealth, and all the headlines that you see on the news are what's paying the news. They're not paying you. Panic selling is the wealth killer. Let's be real. Watching your investments drop is stressful. You see red numbers, headlines screaming market crash, and your brain goes, should I sell before it gets worse? But here's the thing, panic selling is one of the fastest ways to destroy your wealth. Here's how it works. Let's say you bought a stock at $100, suddenly the market crashes and now it drops to 60. You panic sell because you're afraid of losing more. A year later, the stock recovers to 120, but you already sold at 60, so you missed out on the comeback. Now, instead of recovering and making a profit, you're left with the real loss. The people who held on, they saw their portfolios bounce back. Patience pays big time. If you had invested $10,000 in the S&P 500 in 2000 and left it alone, today it'd be worth over $60,000. No risky trades, no market timing, just letting it grow. But if you jumped in and out trying to buy low, sell high, you probably missed the best recovery days, hurting your returns. The biggest gains often come right after crashes, and if you're not in the market, you do lose out. The key, stay invested, trust the process, and let time do the work. So Tay, what's the move? Simple, stay in the game. Forget timing the market. Even experts can't predict highs and lows, so don't stress about it. Just stay invested, be consistent, set up automatic investments, DCA your way to getting rich, dollar cost averaging, and let time do the work. Investing is like planting a tree. You don't dig it up every week to check, water it, be patient, let it grow, and hey, then the fruits of your labor will soon bear there and you can go ahead and eat the apple, get the cash. Hey, if this is making sense so far, hit that like button for me on YouTube. So YouTube actually shows you more content like this. And if you haven't yet subscribe for weekly financial tips that actually help you get rich. But don't go anywhere because rule number 4 might just change the way you invest forever. Most people skip this step and they always regret it later, and some even regret it for their lifetimes. Rule number 3, diversify your portfolio. Ever heard, don't put all your eggs in one basket? Yeah, that applies to investing too. Let's talk about one of the biggest mistakes new investors make. Going all in on one stock, one trend, one industry. It's easy to get caught up in the hype thinking this stock is gonna make me rich. But here's the reality. Even the strongest companies have bad years. Even the baddest bitches have bad days. And if all your money is tied to just 1 or 2 investments, a market downturn can hit hard. Imagine you have $10,000 to invest and you throw it into one hot stock. If that company thrives, great, you're making money. But if it tanks, suddenly your portfolio is down 50%, 60%, maybe even more, and you're stuck trying to recover. Now, compare that to someone who spreads their money across different investments, stocks, bonds, real estate, maybe even some index funds. Sure, some assets might drop in value, but others will hold steadily or even grow. This balance helps smooth out the ups and downs so your wealth isn't riding on a single bet. Look at what happened with tech stocks in 2022, for example. A lot of major companies, ones people thought were untouchable, dropped more than 70%. If you had only invested in tech, that would have been brutal. But investors who diversified, they had a mix of stocks, real estate, bonds, which helped cushion their blow. Their losses weren't nearly as bad, and they had other investments still performing well. This is why diversification isn't just a nice to have, it's a must to have if you want long-term success. So, how do you actually diversify your portfolio? Spread your money across different asset classes. Stocks are great, but don't forget about bonds, real estate, index funds, REITs. They help balance out risk. Rebalance every 6 to 12 months. Over time, some investments will grow faster than others, which can throw off your portfolio's balance. Checking in regularly keeps everything aligned with your goals. At the end of the day, diversification is about protecting yourself. It's the difference between watching your portfolio tank during a downturn and staying steady while everyone else panics. And speaking of emotional decisions, rule number 4 is the one most people struggle with, and skipping it could cost you big time. So don't go anywhere because the next one, it just might save you from taking some very expensive mistakes. Rule number 4, stay disciplined and avoid emotional decisions. If you sell every time the market dips, you're never gonna get rich. Let's be real, investing feels emotional. When the market crashes, it's tempting to panic sell everything. And when stocks are soaring, FOMO kicks you in the butt and you wanna buy all the trending stocks. But the thing and the truth here is fear and greed are 2 of the biggest wealth killers. If you let them control your decisions, you'll always be buying high and selling low. The exact opposite of what you should be doing. Ever wonder why some investors always seem to win no matter what the market's doing? It's not luck, it's discipline. When stocks drop, most people panic and sell thinking they're cutting their losses. But then the market rebounds like it always does, as mentioned, as I've shown you before, and they regret it. On the flip side, when stocks skyrocket, FOMO takes over. Everyone's hyping it up, so they just jump right in, right at the peak, only to watch it go back down. The best investors don't let emotions run the show. They don't panic sell or chase trends. They follow a strategy. Their strategy runs the show. They trust the process and stay consistent. That's how to get rich. Let's talk about one of the most legendary investors. You know him, Warren Buffett. His strategy, he buys when everybody else is scared and sells when everybody else is greedy. Take 2020, for example. The market tanked and people were freaking out, selling stocks left and right, but the smart investors, they stayed calm, kept buying, and saw huge gains when the market rebounded. The people who panicked and sold, yeah, they missed out on recovery. That's why discipline is everything. If you can control your emotions, you can control yourself getting rich. All right, let's be real. Sticking to a plan sounds easy until the market starts acting like a roller coaster. One day your portfolio is up and you feel like a financial genius, and the next it's down and you're suddenly questioning your life choices. So how do you actually stay cool, calm, and collected to actually getting rich? Have a game plan and write it down, okay? Think of this as your financial GPS. Before you invest, ask yourself, what is your financial goal? Financial freedom, a dream house, just growing your money. How much risk can you handle? Will you panic sell if your stocks drop 20%? When will you cash out? Are you in it for the long haul or are you taking profits along the way? Writing things down keeps emotions from wrecking your decisions, because trust me, your emotions will try to mess with you throughout this entire journey. Number 2, automate your investments. Nobody wants to spend hours analyzing stocks. Neither do I at this moment in time. Maybe I do in the future, not right now. The easiest way to stay consistent, just automate it. Set up automatic deposits from your investment account. Invest a set amount every month, every day, every week, whatever it is, no matter what the market is doing. Stop guessing. Let compound growth do the damn thing. This takes the stress out of it, at least for me and a lot of other people that I've helped with this before too. No more guessing, no more panic buying or selling, just steady, consistent growth. And speaking of making investing effortless, if you want a super simple way to start, check this out. One of the best ways to build discipline is by making investing automatic. That's where Acorns comes in. Acorns rounds up. Not sponsored, by the way. I wish it was. Acorns, let's work together. Acorns rounds up your everyday purchases and invests the spare change for you, so you're growing your wealth without even thinking about it. And the best part, you can literally get started in under 5 minutes. Help me out. Use the link in the description, and Acorns will give you a $5 bonus to kickstart your investments, because the best time to start investing was, you know it, yesterday. The second best time, right now. To wrap this up, let's go over the 4 rules that will literally change the way you invest. Number 1, protect your money first. Don't chase hype. Number 2, think long term. The market always recovers. Number 3, ignore the noise and stay consistent. Automatic investing is your best friend. Number 4, invest in yourself. Now I gotta know, which of these rules hit you the hardest? Are you guilty of panic selling? Have you been hesitating to invest because it feels overwhelming? Drop a comment below. I wanna hear from you. And if this video made you see investing in a new, whole way, tap that button so YouTube knows to send you more content like this your way. And if you haven't already, go ahead and hit that subscribe button. I drop weekly videos that make investing simple, clear, actually useful, no complicated BS, no jargon, no boring lectures, just real strategies that everyday people can use every day. One more thing, if you want exclusive investing tips, early access to my best strategies, updates straight to your inbox, join my newsletter. It's totally free and I promise it's packed with value. The link is also in the description. Go sign up now. All right, that's it for today. Go start building wealth with confidence. You got this. See you next week. Peace.